Join me as I take on the challenge of finding the best strategies to protect my money from inflation. Let's see what really works. Inflation is on many people's minds right now, and it's easy to see why. This quiet economic force can slowly chip away at our income and savings, making it harder for us to afford the things we need every day. One of the most important steps we can take right now is to educate ourselves on what inflation really is, how it affects us, and what we can do about it. My hope is that by discussing it openly, we can build stronger financial habits and feel more confident about our future. So, let's start with a quick refresher. Inflation is a steady increase in the general prices of goods and services over time. This means that your grocery bills, restaurant meals, and even your transportation costs may keep creeping up year after year. If you've ever noticed that something you bought last month just went up in price, you've probably felt the impact of inflation. It can be frustrating because it quietly whittles away our purchasing power, meaning the same dollar buys less than it used to. Over time, even moderate inflation can significantly reduce the value of our savings if we aren't prepared. Let's talk about how inflation can affect our goals. Perhaps you are dreaming of buying a house one day, saving for higher education, or planning a big trip. When inflation is high, these dreams become trickier to achieve because each dollar saved doesn't stretch as far. It's like trying to fill a bucket with water when there's a tiny hole in the bottom. Your efforts can still pay off, but it's going to take more time and a well thought out plan to succeed. A key strategy to combat inflation is investing in assets that have a history of outpacing inflation. Precious metals like gold and silver are known to rise when inflation does, but don't forget that these can be volatile too. Real estate is another option because home prices and rental rates often track with overall economic growth. Additionally, index funds and ETFs connected to major stock market indexes such as the S&P 500 can sometimes serve as a buffer against inflation by reflecting the growth of large companies. Diversifying is also crucial if you truly want to protect your money. If you put all of your savings in one place, say only in cash, it's more exposed to the hidden tax of inflation. Instead, consider spreading out your investments. Stocks, bonds, precious metals, real estate, and even alternative assets can each play a role. This strategy can help ensure that when one sector dips, another might be rising, keeping your overall portfolio on steadier ground. Wealth-generating assets are especially important in an inflationary environment. Dividend-paying stocks can offer regular income, which might rise as companies grow. A small business or side hustle can also be a good way to add income while building valuable skills. And let's not forget having a solid emergency fund that provides a safety net if unexpected expenses pop up. Another step is to regularly review your budget to match the reality of rising prices. That could mean cutting back on non-essential spending or finding ways to earn more, perhaps negotiating for a higher salary or picking up freelance work. These small changes can help you stay afloat when the cost of living climbs. But out of all these strategies, one stands out as incredibly effective for taking a forward-thinking approach, creating multiple streams of income. Whether it's investing in dividend-paying stocks, real estate investment trusts, or starting a side hustle, having multiple income channels decreases your dependence on any single source. This diversification of income can help you stay resilient when prices are rising fast. Building multiple income streams does take effort and time, but the payoff is huge. It increases your financial security by ensuring that a setback in one area doesn't knock you off track completely. As inflation ebbs and flows in the future, multiple income streams can help you ride out turbulent times, stay on track with your savings, and keep investing in growth opportunities. You may be wondering how to begin. The first step is to identify your skills and passions. Can you turn a hobby into an online shop? Do you have expertise that you can sell as a consultant or tutor? Can you invest in a friend's startup? Each of these paths could become a new source of income that, over time, helps protect you from inflation. The key is to start as soon as possible, even if it's small, because small efforts can grow into something significant over time. And let's not forget the big picture. A forward-thinking view means recognizing that the economy, technology, and global markets are constantly changing. Inflation might pop up in different sectors or at different speeds depending on world events. By staying informed, consistently learning, and always looking for ways to adapt, you'll be much better prepared to manage and overcome these challenges. Research new trends or cutting-edge businesses that could become profitable in the long run. Explore emerging technologies or global markets that may offer new investment opportunities. Keep your skill set sharp so you can pivot into higher paying roles or launch new ventures. Combining knowledge with adaptability is one of the best ways to hedge against the ever-shifting impact of inflation. In conclusion, guarding our money from inflation is not about a one-time fix. It's an ongoing process that calls for awareness, smart financial decisions, and plenty of resilience. From choosing strategic investments to building multiple streams of income, these steps can help you secure your finances now and in the years ahead. Thank you so much for watching. I'd love to hear your thoughts on this topic in the comments below. Check out my upcoming videos where we'll dive deeper into financial strategies, emerging opportunities, and the best ways to stay ahead of inflation. Remember, your future is in your hands. Staying informed, being proactive, and thinking ahead is the best way to safeguard your finances. And with that, let's wrap up today's discussion. Don't forget to leave a comment so we can keep the conversation going. Remain proactive, diversify your income streams, and never stop seeking growth opportunities. Leave a comment to keep the conversation